Success in trading, whether you're focused on forex, stocks, or cryptocurrencies, doesn't just happen overnight. It's a process that demands discipline, a well-thought-out plan, and the mastery of 3 fundamental rules that can significantly boost your chances of success. These rules are essential no matter what market you trade in, and trust me, the last one could be the difference between consistent profits and unnecessary losses. Let's start with the first rule. Focus your efforts on trading a maximum of 1 to 3 assets. Whether you're trading forex pairs, individual stocks, or even crypto coins, spreading yourself too thin across multiple assets can lead to confusion and missed opportunities. By concentrating on just a few, you can really get to know how these assets move, what influences their price action, and the technical patterns they tend to form. Mastering a few assets allows you to make sharper, more informed decisions, rather than chasing setups all over the place, which usually results in burnout or losses. Now, let's move on to the second rule. Sticking to a proven strategy and applying it consistently is the key to long-term success in any market. It's one thing to have a strategy, but it's the discipline to follow through with it that makes all the difference. I personally rely on LuxAlgo premium indicators to guide my trades, and they've been instrumental in enhancing my decision-making process. These indicators offer incredibly precise signals that help confirm market trends, allowing me to avoid false setups. Recently, I tested a particular strategy 100 times using these premium tools to ensure its reliability. I tested it 100 times on the British pound against the US dollar on a 4-hour time frame, and here are the results. I started trading with an account balance of $5,000. Depending on the actual volatility and the session I'm in, I use around 5 to 10% of my account size for each trade. This means that if my first trade is a winner and I make a profit of $100, I add it to my account balance. So, for the next trade, I have $5,100 and use 5 to 10% of this new balance. The same applies to losing trades. If my first trade results in a $100 loss, my new balance is $4,900 and I use 5 to 10% of this updated balance for the next trade. Alright, first up, you want to open TradingView and choose your asset. Keep in mind, you can apply this strategy to any asset you prefer, whether it's a cryptocurrency, stock, or forex pair. Next, we need to add our indicators to the chart. For our first indicator, we want to use LuxAlgo's price action concepts. And for our second indicator, we're going to use the signals and overlays. Now, before we dive in, a quick note. This video isn't sponsored by LuxAlgo. However, using my link in the description, you can support my channel and get up to a 50% discount on LuxAlgo premium indicators with an annual payment. Now, let's break it down with some examples. In a bullish scenario, you might enter a buy position when you see the price bouncing off the lower reversal band. But one signal isn't enough. You need multiple confirmations. So you want to wait for a bullish confirmation signal to appear, alongside a bullish change of character label. These added layers of confirmation help filter out false signals and boost your chances of making a profitable trade. For a bearish setup, it works the opposite way. You'd look to enter a sell trade when the price gets rejected off the upper reversal band. Again, don't rely on just one signal. That's why you need to look for a bearish confirmation signal. And finally, you want to see a bearish change of character label to confirm your sell entry. Combining these signals helps you avoid entering trades too early or too late, allowing you to catch higher probability trades. Now for the third and most important rule, risk management. This is the one that separates successful traders from those who struggle, and it's often the most neglected part of a trader's plan. Proper risk management should be your top priority before entering any trade. Most traders focus too much on perfecting their entry signals, but if you don't have a plan for how much you're willing to risk or where you'll take profits, even the best strategy can lead to failure. An effective risk management tool is the Smart Trail feature, which allows you to set strategic stop losses that adjust as the price moves in your favor. This way, you can protect your profits while minimizing your downside risk. In addition to that, make sure to predetermine 2 profit-taking targets. The idea is to gradually lock in profits instead of holding out for one big exit. By having your position at the first exit signal, you reduce your exposure while giving the trade room to run. Then you can adjust your stop loss to break even, ensuring that the remaining portion of your trade is risk-free. If the price keeps moving in your favor, you'll hit your second profit target and maximize your gains, all while safeguarding yourself from unnecessary losses. Remember, by using my link in the description, you can support my channel and get up to a 50% discount on LuxAlgo premium indicators with an annual payment. Be sure to fine-tune the settings to match your asset and time frame. And as you master this approach, you'll start seeing incredible profits and impressive results in your trading. If you found this video helpful, make sure to hit the like button and subscribe for more trading strategies. Happy trading!